So I was right at the beginning of the year. I said at the very beginning of this year, we will end this year, 2024, with record highs. And I cited at the time that I thought that there would be 3 or 4 main reasons for that. And today, I'm going to come to you with some great news. If you're an investor in property, and if you want to get investing in property, I still think right now is probably one of the best times to be able to get involved. So my name's Mark, I'm an entrepreneur, property investor. I've got about £3 million worth of property. I've been running businesses for about 20 years. I've got a wealth of experience in entrepreneurial activities and investing. And I'm using this channel to bring as much information as I can to you guys out there. Now, before we get into the video, give it a big like. It really does help me out with the algorithm. And if you haven't already subscribed, consider subscribing. Remember, if you click the links in the description, you can book a free one-to-one Zoom call with me until I get to 10,000 subscribers. I'm on about 6.5 at the moment, so you've got a little bit of time left there. And if you want to download my free ebook, there should be a link in there as well. So let's get into the video. Let's talk about the data that's just been released. This is going to be a data-driven video. So bear with me. I hope you like data. If you do, you're in for a treat. If you don't, you're probably going to hate it. But stick with me. I promise you it's really important and really good news. So I'm going to look to my left slightly because I want to make sure that I read the information correctly. The average house prices in the UK have just hit a record high. It currently stands at 298,000 and some change. So we're now at absolute record highs. And back in January, when the market wasn't doing so well, I said that towards the end of the 2024, Bank of England would start cutting rates. People had already been transacting at this higher interest rate for a few years at this point, and I felt that as soon as those interest rates come down, then affordability would go up and people's confidence would return. Now, it wasn't just the interest rates that I was interested in, it was also the fact that there had been such rampant inflation. So the value of pounds had been deflated significantly. We were looking at highs of 11% annualized and probably a total inflation of around 20%. So if I'm looking at real terms property over the last 5 years, it's shrunk significantly, which means on a nominal figure, i.e. the actual number, I think there's so much that the property prices can climb over the next 3-4 years, and lots of analysts are saying 25%, 20%, some more outlandish ones at 35%, but the general consensus is between 20 and 30% increase between now and 2028. So that's a really, really exciting thing. But even with that, I think that's only really the inflation part taken care of. But let's get into this data. Let's have a look at why house prices have rocketed and what that actually means, what the numbers are. So the monthly change, i.e. month on month, house prices are up 1.3%, which is the highest number it's been since November 2022. So we're talking 2 years of pretty stagnant prices. Now we've got some really big changes. Quarterly change of 1.4%, which tells you that really over that quarter, all of this change has happened since the Bank of England have started dropping rates. And an annual change now sitting at 4.8%. So that's 5% growth over this year. And anybody who knows much about UK property, it grows on average between 4 and 7% per year. It doubles every 10 to 15 years. That's the average. It's historically been proven for a long period of time. If you get in now, if you buy a £100,000 house, it is highly likely that that house will be worth £200,000 between 2035 and 2040. That would be my prediction, and history would tell us that that is highly likely. And again, 2 main reasons for that. Supply and demand. As we know, the UK does not produce enough houses. It's a very attractive place for people to emigrate to, and the population continues to grow. That's number 1. And number 2 is inflation. Every major economy targets a certain level of inflation. Again, this video is too short for me to be able to explain why, but I'll give you it in very brief. 2% is the Bank of England's target, which means every 10 years, you're looking at around about 30%, 35% of the currency being devalued. So you have supply and demand, and you have inflation. And inflation works on your benefit when it comes to house prices, and it works in your benefit when it comes to depreciating debt. So it works 2 ways for you. But what we're focusing on today is really this house price change. So this is the 5th consecutively monthly increase. House prices are up 4.8% on an annualised basis, and now we're approaching that £300,000 average house price. And the Bank of England have only dropped rates by, what, 0.5% at this point? There is so much more to come. I mean, Goldman Sachs are saying that it's going to go down to 2.75 by the end of 2025. And I think it could be even lower. I think there are so many rumblings of economic woes, of job losses, and all sort of bad stuff that Bank of England is going to have to step in and cut those rates in order to encourage growth. So I really do believe that interest rates could be coming down significantly over the next 12 months. And if that happens, house prices are going to skyrocket. So let's have a read of what's been said. So Amanda Bryan, head of mortgages over at Halifax, starts off by just outlining, that house prices have grown by 1.4%, 4.8% over the quarter, and that this is the strongest demand and growth that we've had for a long period of time. She then goes on to say that improving levels of demand for mortgages and the easing of rates is significantly increasing buyer confidence. The last statement says as moving into 2025, positive employment figures, anticipated decreases in interest rates are going to continue to support demand. This should underpin house price growth, albeit at a modest pace, as borrowing costs remain above the average of a few years ago. Now, that's assuming that that's the case. Now, I'm of the irk that I believe that there will be much stronger cuts going into 2025. I definitely see the number beginning with a 2 in terms of interest rates sometime in 2025. It may even be 1 or lower. So I believe that house prices really could skyrocket over the next 12 to 24 months. Now, there'll be lots of people saying that that's not going to happen, affordability is out of kilter. But if we look at the data, and certainly if we look at the regional stuff, and this is really interesting on the regions, the north is really starting to rocket up, right? Like we're looking at the Northern Ireland and the Northwest, 6.8 and 5.9% increase annualized, both of those regions. Now the Northwest now has an average of £237,000, but we're still buying houses in Sheffield for like 140, 130,000 for a 3-bedroom terraced house. Now those sort of prices are very, very affordable. If you consider a 120 grand mortgage, so £120,000 mortgage on a 5% interest rate, you're looking at £500 a month, right? So 6,000 over the year, 120 at 5%, cool. If that became 2.5%, suddenly it's only £250 a month for that property. These are very affordable prices, and it's those properties that are really starting to gather pace. Now, in my portfolio, I've got properties in London, I've got properties in Oxfordshire, I've got properties in Wellingborough, Kettering, Corby, I've got properties up at North, and I have to say the areas with the cheapest properties are the areas where we've seen the most house price growth. And certainly when we're trying to buy and source properties, it's those cheaper properties where the growth has been happening over the last 12 months. And I think that is going to be underpinned moving through the next 12 to 24 months. Now, if we look at the housing activity report, HMRC are basically saying that all their data is up. Everything's up. More transactions, more activity taking place, everything is up. The Bank of England is saying more borrowing is up. Everything is up. RICS are saying that more buyers are coming to the market, more sellers are coming to the market, more agreed sales. I mean, it's just good news, good news, good news. And it's all because everybody knows that these higher interest rates can't go on forever. So the smart money and the smart investors are getting in now, knowing if they can buy a property with a small discount, even if you could buy a 100 grand property with a 10% discount, you are highly likely to get all of your money out in 2 or 3 years' time and end up with a free house using just a buy, hold and refinance method. The simplest form of purchasing property and the lowest risk when it comes to making investments. So for me, all of this data points towards a very, very good 2025 and 2026. Now, have property investors had it hard over the last 3 or 4 years? If you're a property investor out there and you're watching my channel, you are screaming at YouTube saying, yes, it's been tough. And I can tell you right now that my profits went from like 8, 9, 10,000 pounds a month down to 2, 3,000 pounds a month. Now, it started to come back up as we've been able to raise rents, but if those mortgage rates come back down to where they were before, oh my God, it's party time. And I believe it may well be party time in 2025, 2026. But I'm interested in not just my opinion, what are your opinions? If you write a comment to me on this video, I'm going to reply to absolutely every single one. Now, I understand this is a polarizing topic and I'm likely to get comments on both sides of the argument. So put them down there. I will reply personally and I'll give you my thoughts. We can respectfully disagree. We may also respectfully agree. But guys, whatever way you cook this looks like good news for the UK property market. And I cannot wait to bring you the next report in a month's time to see if these house price rises continue. It's my prediction right here, right now, that they will. There'll be another 1% in the next house price report. Guys, see you on the next video. Thank you so much for watching. Like and subscribe, download my ebook, book a free call. It's all for you, and I'll see you on the next one. Cheers, guys.